everybody. Thank you for joining me. And this is Lord mercy. And that should be a lot better. Is the sound better? Hello, George. Jaron, I see your question. I'll get right on it. Is there sound? Ruth says perfect. Then we can continue. That's all we need. Thank you, Ruth. I appreciate it. All right. We just had a PUG meeting less than like 2 weeks ago, but we have a couple topics. We're going to cover the volume indicator today, if you have another, and the last conditional change. 2 questions we had. Last conditional change, to go over that, and again, the volume indicator. So the volume indicator was a question that we had from the last session, and then today in the live trading room, we had a couple people that were confused about my comments about the difference between on-balance volume. I still use on-balance volume in certain ways to look at the volume trend, and I'll go through that, but I use my volume indicator because it's a lot more distinct and picking up and filtering out convergences and changes in momentum, which is something unique and a more modernized look at volume trends. So with that said, if everyone can see this and everyone can hear me, we don't need to play the Who's song from Tommy. Tommy, can you see me? Tommy, can you hear me? But we do have to have you read this risk disclosure. All right. Okay, so Jaron had a question. How do you see the recording? So if someone has to split early, I get it, no problem. Or if someone wants to review it for later, that's one of the main reasons why we do record these. So just to let you know, you could see it one of 2 ways. Tonight, you could go up into the, if you go right up in the upper left corner, you'll see like a menu little bar, and then you'll look at archive. Now, it's weird. I don't know why it does this, but it's gray. So it makes it look like you've clicked on it. And if you click on archives and then you click on recordings, so I'll just kind of pop this into the room if you can see this without showing it up. No, it's not going to let me do it. All right. But if you could just see where it says up there at the upper left, the little menu bar, the 3 little things next to the people with the 25, just underneath where it says closed panel, it says archives. Underneath archives is recordings. If you click on recordings, all right, if we click on recordings, I'm going to do it for you. In fact, this is what it'll look like. A page like that pops up, and then you know this is the recording. It shows the date and the duration, and you know you're watching which video you're watching. All right. That's how you do it. Now, more importantly, the archives are in that. They're right there. Archives, right there. Archives, recordings. Here's the better news. If it doesn't show up for your version, I'm not sure why that would be. That's a good question. It should show up. Here's what you would be watchful for. We take this recording and we add it to our website, and we send all our members an email link so that you can see it, because this platform that we use records every time I speak. It records everything I say. Evidence, so to speak. So that's why they say sometimes restraint of tongue and pen. And these days, pen would be text messages and emails. It's evidence, and then again, recording. So always got to think about being careful of what you say. But with that said, when we give a technical analysis and you want to learn and repeat and see it again, it's recorded. We take that recording and we post it on our website, and it's in the, I believe, the members section, and very generally we'll get that out within the next, before the next day, business day. So tonight, should probably compress it, blah, 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 send an email out tomorrow, and you'll have access to it for tomorrow. All right. So at the very least, you have a couple ways of seeing it if you miss it. Hopefully that helped you. All right. So there's no, Ruth says that she doesn't have archive in that room either. That's strange because it is currently recording. Good question. I don't have the answer right this second, but we'll try to find it. Maybe it's in the main recording room, not in this room. Maybe that's another what it could be. So if you go back into the main trading room, maybe it's recorded there. That might be what it is. In webinar mode, we don't get it. That's weird, Jay. It's in webinar mode. Maybe. Good question. Good point. But anyway, here's the good news, Jaron. You'll have access to it. We'll get the recording to you. All right. So with that said, what is the big volume indicator? This is something that's a part of our PUG annual meeting membership, along with other tools. We're going to discuss the volume indicator, and then we're going to discuss on the board how to better use the radar screen for looking for signals. So two things, like today, we went through a list of scans today, true, if you were in the live trading room. And one of the things that we came up with was, ironically, at the end of day, we had, let me get down to it. Let's get down to my radar screen, and we'll share you with the main, this is the main radar screen. This is the main product for the lifetime package that many of you have. So this is the breakdown. We have the symbol. We broke down all the top industry sectors, and then the industry groups like staples, and then stocks within those, the top stocks. You can always add a stock or delete a stock if you want, and you do that by right-clicking and just insert a blank row and throw in whatever NXPI, I don't think is in here, NXPI. There it is. So I just added NXPI. So you have the functionality in this platform or with TradeStation and our work to add a stock. And if you don't want to look at Ubiquity Networks, for example, or if you see that there now is 2 NXPIs, just hit delete, one's gone. Go up to File, and then save any changes that you want to keep. All right. Next, you have, in this event, we have daily, the columns, last net change, percent next change. And I always like to look at where the market closed relative to, or what its net change is. And then again, what its percent change is, right? The trade setup that we took today was in AMD, which is ironic. We were in the right stock. It was up the most of all the semis. What we got was a buy signal set up on a daily basis that we came into the room, and I said, if the market's going to rally, we would look at this from a perspective of a 15-minute trade. And what the trade setup was based off of a last conditional change. So if you'll notice, this is the AMD. I had a 15-minute chart. This is really worth discussing today because for two reasons. We had the volume indicator, and one of my favorite indicators that we've done multiple sessions over is my histogram. And I'm going to tell you right now, the histogram is a price momentum that reflects between the PPS price as well as the distance of these moving averages. That's what constitutes this histogram. If you'll notice, more times than not, when you get a momentum indicator, so for example, this PPS sell signal right here, it was generated on the close of that bar. You'll look at the red line. It was green and it went red, meaning it confirms that it's a PPS sell signal. Sometimes, not all the time, but like in the case that I'm going to try to show you right now, and I know I'm jumping around and I apologize for that, but I just want to cover this real quick. A lot of times the momentum, and I can't find it in this exact precise second, but more times than not, we would get a reading of the momentum indicator, maybe a bar ahead of a PPS signal. When you get a confirmation that you go from the red to a green momentum change and you have a PPS buy, it signals that there is a strong momentum change in price. That's what that indicates. A lot of times when the price is going down and you see maybe a reflection that the momentum is making higher lows or getting less negative, it's telling you that the trend is changing could change pretty soon. Today, we said if the market generates a close greater, and I picked out this little last conditional change because rather than the open from the prior day, it was pretty darn close, but I picked that last conditional change. Why? Because this was a last conditional change that was also generated off, and it had a sell signal. It was the last known sell signal right there, and you can see the gray line. There was a new one that formed over here. This to me was a very important last conditional change because it generated an actual sell signal that had followed through weakness in the marketplace. We had what we would call a breakout benchmark candle. And what I said in the live trading room is I would wait for swing traders or day traders, more importantly, why we had a 15-minute trade. I said I would look for a close greater than that last conditional change. And that's exactly what we had up in the room. We got that last conditional change, that buy signal right there. And then, just to put a little bit more spice into the recipe, I actually gave a upside price projection of where prices could go to around 82.5, which was a weekly pivot level. Anyway, with that stated, when you have a buy signal and it's accompanied by an increase in the volume, that shows there's strong participation in the market. And when instead of maybe the market might have a breakout, it gets to a last conditional change, which acts as resistance. In fact, if you notice that the high of that 15-minute sell signal right there, that high of that bar, that was the high which caused the doji. There was a lot of people scratching their head right almost exactly at the same price. So the last conditional change acts as a resistance until it's violated. Now, today in the room, we also had a couple guys, or there was comments that I always say it needs to break out. What's a breakout? A trade through it or a close above it? A close above it. A close, not a trade. Trade is a candle wick. It trades and it fails. But when a market closes greater than or above a resistance, that's what I'm defined as it has a breakout. It broke out, it closed, it didn't just pierce it and crack and bounce off of it. It closed greater than. When you get closes greater than resistance, especially my last conditional change, and under the right condition, meaning good participation of volume, these are dynamic setups. So now you have to kind of just sit and watch and wait. It's ironic, and just to go over this trade, because this was, if you were in the live trading room today, this is exactly what I covered. So this was today, I'd have to say, the trade du jour, so to speak, and one of the main focus in the room. So with the time that we spend in the mornings and in what I go through from the scans, just practicing what I preach, we come into a PUG meeting. I think it's really good to, number one, review what works, what doesn't, and where do we get the ideas to trade, and then again, how do you trade them? First and foremost, if the market is going to break out, you got to have a place to get in, and then you also have to know what your risk factor is. There are two things that you can do on a risk factor. You can buy on the confirmed breakout. Now it's already been in a buy mode. How do we know? It's got a PPS buy. We could have bought the breakout there. I choose not to buy just any breakout because it didn't break and close above a last conditional change. So if you do, sometimes you may find out it'll come right back down against you. And I don't think for paying up a little extra for confirmation that the market broke out by closing greater than a last conditional change resistance, paying up a little extra, my comments is always, for a high probability, you're going to have lower profitability, but you're going to be more times than not. So if you're buying on a confirmed breakout, a close greater than a last conditional change, and that's why the last conditional change is on this board right here that you see, the gray lines, you can color code them. Now, we've done this many times before. It's worth reviewing. In fact, I believe it was Ruth, if I'm not totally mistaken, not to throw her under the bus, but she had a hard time, and I thought it was, it was interesting because it's true. If the charts are a little squinched down, you only have so much real estate on your charts, you can change the color of this to your own customized So nuance, so that you know what it is. And I believe we had originally, or we had added a fuchsia color. So now I know that that fuchsia color is a last conditional change. When a market closes greater than that level, that tells me that's a bearish last conditional change. It's resistance until resistance is violated by a close greater than. All right. Next, now you know you have a buy and it broke out, and now you have a confirmed breakout, and you look at the volume indicator. The person volume indicator is a momentum indicator, and it's also a trend of volume indicator. And what it does is it reflects a change in market participation, and by having that histogram. When it falls below the histogram, it's negative, meaning it's probably in a sell mode. When it's positive, it's in an uptrend mode. Now, let's take a look here real quick. And one of the interesting components that you could see here, that today we had the market had fallen, it was near some support, blah, blah, blah. But also we, if you even dig down a little bit further, if I ask you to just examine this, and we go and we say, let's take a look at this market from that low to this, from close to close. Because remember, all indicators, every indicator, every technical indicator is based on the close. A lot of people look at the low of a move, such as the absolute low. Well, when you look at our indicator reading, it's not basing it off the low, it's basing it off the close. So whether it's a moving average is usually based off a close. Most indicators that use a moving average are based off the close. So don't look at the actual low, look at where the market closed to its prior close point. And that way you can kind of compare an apple to an apple. The close of this bar right here is a lot lower than the close of the bar over here on August 10th. True statement. Market's down. This area close is lower than that area close. Respective of the indicator, the close of that bar, the indicator, and if we take a look here and go just to compare apples to apples, the histogram component to the histogram component, or even the moving average component, is higher. This is a classic bullish convergence pattern. So if you're looking for a stock to go up, you want, if it has been in a downtrend, you want it to have been in a weak volume downtrend and a convergence pattern, and you get a little bit more, at times you can get a little bit more bang for your buck, so to speak, on a recovery. So when you do come late to the trade, meaning you didn't buy the actual open or the low of the whole day, and you join the trend late under a convergence pattern, the odds are in your favor that there's going to have some follow through. So while we didn't join the actual low of the day or buy the low of the day at around 77.5, you're in on the trade at around 80.5. All right, so you missed $3 there. For what? Confirmation that higher probability that you could see some upside. And if you're looking to buy a breakout at 80.5 and you have an 82.5 for a day trade on a stock, I mean, that was our target, was 82.5 on this, right back up to the weekly pivot. Under these conditions and under what we do, meaning the indicators at hand, PPS, last conditional change breakout with the person volume indicator, these are the kind of setups that help us be on the right side of the market more times than not. So look for that convergence. Now, in all fairness, let's take a look, and I'm going to delete this line. I'm going to delete that trend line. So first off, you can color code the last conditional change. By the way, let's go over and look at last conditional change. This is our stock page. This is our long term, which means the interval is daily. We're going to change this to short term. I've done this before. I don't think I want to start messing with it right now. We're on a roll. But let's say I want to look at a 15-minute buy signal, and I want to look for a 15-minute last conditional change. For VIPs, we put in the last conditional change on the screen so that you can change your interval here. And I'm going to change it to just 15 minutes by one click. There it is. So it'll take a little while for this to fill in the data, but the point is that if I'm looking at AMD, for example, and I've set up, hey, it's got to set up, we're looking for a breakout, and I want to wait till it breaks out, and I'm just not going to be staring at the chart. It's not a big deal. You know that at every 15-minute interval, you look at the market. You don't have to stare at your screen every 30 seconds. Just in the next 15-minute bar, 15 minutes after that, or you can actually have your radar screen changed to a 15-minute interval. So if you're into trading on a 15-minute basis, that's what you can have at your disposal by changing and presetting it to just 15 minutes if you're looking for 15-minute signals. So in any event, on the semiconductors, it's loading the data right now, and when it does fill in, and we can come back to that in a minute, when it does fill in, it would have a last conditional change, and it would say bullish breakout, right? So it would already have reflected the market close greater than a 15-minute, a last conditional change, or you could watch the market, draw a line on your chart. There's a lot of things that you could do to take advantage of that particular setup. But at the end of the day, last conditional changes, you're looking for breakouts above it, and you're looking for confirmation that if it does have an upside breakout by closing greater than a LCC resistance, make sure it's on an uptick in volume. Now, I'm going to add one here called Insert Analysis Technique, and we're going to see if I might even have it on in the background, but let's double check. On balance volume, it's turned off. I did have it on, so let's turn it back on. All right. So another comment that I made earlier today on a different stock before we came in here, some of you were probably in the room. I said my indicator, more times than not, shows bullish convergence more so than on balance volume. Now, you can't see on balance volume. I wanted you to focus in on the low here because, again, the on balance volume is the yellow and the blue is the moving average that we overlaid on it. And if you look at AMD, it looks like it went down on strong volume because on balance volume made a new recent low. It took out the low from its August 10th bar. So on balance volume probably would not have given you the insights of a bullish convergence pattern. And that's what I wanted to just say from a testifiable perspective. You can clearly see our indicator has more of a convergence clearly showing, making higher lows. And that's what makes this such a powerful tool. No one really has this. Very few people have it, very few. And it's available only for PUG members. And that's the way we're going to keep it. It's not going to get, and I don't want to say this word on a recording, bastardized, but that's the word. I said it. Okay. We're not going to chop it up and have the world. It's a very unique tool. I hold it very closely. I respect that tool. While, again, a comment was made in the room that, John, I read your book in 2012, Mastering the Stock Market. You went through and you use OBV, and I still use on balance volume. The comment is I rely more on my volume indicator. My volume indicator was created after that book was published. I started to note that things were going weird about on balance volume in a period of 4 years, and I'm not sure if it was because of maybe dark pools. I'm not sure if it was because of options. I really don't have the answer. I wish I did. All I know is we've struck gold. They say don't fight the Fed, and don't fight an indicator that works. And this particular indicator, for those that have it and the VIP, is absolutely worth its weight in gold. Finding opportunities, especially using that momentum indicator component. I do know, I think it was in gold today, just before we came in here, and I would like to address that because this would be a part of your PUG group and training, and it is something that we talked about just before we came here. And let me get into looking at gold real quick. GC enter. The algo model that we have in the live trading room picked up a short that was approximately up on 2 contracts, $5,000. Let me go and try to format on balance volume, and we got to go to scaling, and we're going to automatic scale it, hit OK. All right, perfect. Now we're going to our indicator. We're going to go to format analysis technique and do the same thing. Where is volume indicator? Format it, go to automatic scale. There it is. So ironically, I was saying that this gave, and again, the model we have in the live trading room, gang, it was a 5-minute model. So here is a 15-minute model, and it's very similar. So I mean, I'll compare the same time frame and the same setup in just a minute. But when prices break out and start to make newer highs, right? When the momentum of price is weakening, you can see the histogram weakening. So that tells you the condition of the buy signal. Is there strong participation? Is there price momentum? It rallies and then 2 bars later it pulls back. It takes forever to go up. It takes 2 bars to go down. It's lost positive momentum. So this was a market that was already under duress of not being able to maintain true strength in its upward move. The volume on balance volume. Now here's an interesting observation. This particular breakout showed on balance volume had a strong move. It took out the prior peak swing high in OBV. You can all see what I'm sharing with you. The theory is that when a price moves up and there's good volume, someone probably got long on that thinking it was breaking out, and notice that it never took out the last conditional change. Finally takes out the last conditional change here, but yet now both OBV and our volume indicator is clearly negative. Not a very strong good buy signal at all. In fact, it's struggling. So how do you trade this? That's the key. I want to teach you, how do you put the person's indicator that's in the package for the lifetime users together? How do you trade this? First, if you start to see, and I know I had a really, what I felt was one of my best 3-day or in-person seminars, and I said, and I created charts, and I said, does the next time you do a trade, does this look like that? And I also put it in that that summer school we did last year. I said, does this chart look like that? So your game plan of trading is you have a checklist before you get into a trade. If you're going to get long, did it break out of LCC resistance? Is it up on conforming volume? If the market's going up and the volume's going down, it's not a great buy setup. On the other side of the coin, when you get a sell signal and you're in a negative divergence in the volume, that is a wonderful setup on a short position. Now, to be fair, this sell signal that was generated with the momentum of the histogram was clearly now flashing time to sell. It had struggled multiple times. It had multiple shorts that didn't work, but now this one came at a cost of a breakdown of momentum, and the histogram was in a full divergence pattern. On balance volume had, at that point in time, we did make a close greater than the prior peak, and on balance volume was, it was still lower. So again, it would have been an effective identification that the rally was weakened under duress, meaning it did not have any strong volume to it. Our volume indicator was clearly in the red and definitely showing that this market was not going to sustain the upside. Under conditions of divergence, I just shared with you with AMD with a bullish convergence, and now look at the condition of gold, a bearish divergence. The volume indicator clearly shows negative pattern. This would have been a great identification to say, you know what, I think we might get a little bit more bang for our buck on the short side. So I wanted to say what happened with the sell signal. Here's the last conditional change. Double check here. Format, bullish, last conditional change. Let's go to color and let's go to green, and there you go. So you can see the last conditional change. It was a close greater than the doji, and I mean literally it closed below it, and then you get a PPS follow through sell signal. I mean, Lord Almighty, that was broke below a last conditional change on a PPS under volume divergence. If you don't like that one, then you have, after 3-4 bars, a close below the doji, and it had closed below prior and past last conditional changes. This thing was, either way you look at it, all set to move down. How do you trade it? Where do you place your stop? If the market truly is bearish, your stops can go, when you're short, your stop can go above the high of the bar that gets you in, which should be a last conditional change, and it shouldn't be challenged or touched. And if you join a trend late, join a trend that's already been in a signal already. You can start with the initial last conditional change, or add to, when the market moves lower, place it at least above the prior last conditional change. So this bar here creates one. Don't put it above this bar, put it above that bar. Anyway, the last conditional change, if you use it as a tool to both enter trades and trail stops, it's a fantastic tool. That is the last conditional change. This is something we created now 16 years ago. 16 years. I don't know where my life has gone. It's fantastic. And here I find myself still teaching this. So this is combined the last conditional change setups, helping traders to identify a bullish momentum. I mean, you know, you could take a look at the trade at 1:30 in the morning. Same concept. Momentum's going up. Momentum's going up, right? It's green bar. OBV's just looking to show some signs of recovery and breaking out with that close greater than a last conditional change. But the histogram of our indicator has been positive this whole time, showing that there is strong accumulation. And as you can see, it had some upside follow through. I really would have to say that this particular class on PUG, to demonstrate the power, and I wanted it, and I always enjoy saying, if something's good, it's you know, you're only as good as your last trade or your last setup. And I think in the live trading room with AMD's trade, specifically using this, and in our algo room, I have, for that reason, I find that this volume indicator is so powerful that when you get setups like for a short, and you've got a short position on the PPS on the algo went short, and you see that indicator red, man, that's just like, there should be no hesitation. And I think I try to get people more involved into identify that. It's an absolute killer. It's a great confirming tool. While on balance volume, and yes, I use it, and you guys see me use it with a 60-minute basis a lot of times with the SPYs, the Spider, S&P 500, I prefer and I use and rely more, often than not, my volume indicator, especially since it does conform to identifying bullish conditions, especially the nature of that tool by the histogram component, with the green bars above positive and the red bars below negative. That negative histogram is so strong to identify the market's not breaking out anymore. Despite the fact it goes up, it's not on strong accumulation volume. And the theory is, boy, when it does get ready for a sell, it's going to wipe out, because there were some weak longs up. And then when they start to take heat, they do like LMO RFM, which is let me out right now. It's a different word we didn't include, but I think you understand what it is. All right, I want to just change this over to the 5-minute time period, because that just is what we had in the room. If you were in the room today, I just said it just as we were leaving. I wanted to be fair, because this is a good topic about when we when we're looking for trades, we're looking for what? We're looking for momentum. We're looking for high probability. We want to know if the market has the ability we get in to go somewhere. Not every trade's going to work out. Again, that's what stops are for. But we can put the odds on our favor. Like when you look at a 5-minute chart and we got an algo that's short, and here you got low closed dojis at the high of the move. Now, in all fairness, it's slight divergence with OBV. OBV, the on balance volume, did show a divergence. This market made a new high just by a few pennies. It made a new high of the previous green bar over here. The peak of that volume reading was higher than the secondary high. So this would be, if you had this squinched up, you'd say, oh, it looks okay. If you had it microscopically looking at, which you probably would want, but you can also say, hey, when it generated a sell signal, it was already in a decline from its peak. It was already in a decline in its peak. However, our volume indicator clearly shows it's already been in the red, and it is a much more pronounced in the defense of our indicator here. It is in a more significantly pronounced divergence. If you couldn't, it's a little hard to see on OBV, but it really is magnified with our indicator. So that's why I have to tell you that when you get a sell signal or a buy signal and it's under a divergence scenario, right? That is where you get a lot of magic out of trades, and that's what you're looking for. The fact that in this case, and I think this is the right setup to look for, a PPS close under bearish divergence pattern that closed underneath a last conditional change support is just a fabulous high probability trade. So whether you sold it here and then your risk is above the swing high or the high of the first last conditional change, which would be up there. So enter on the close of the open on the breakdown, and your stop goes above the last conditional change. It should not, if the market truly is bearish, man, it shouldn't see a new high. It should go straight down, and that's where you get those wonderful moves that and in this case, the live trading room, I believe it took this short there for about $5 grand, $5,000 just in that short little time frame. How did it give $5,000 profit off of a 2-lot? Real simple. It was under divergence, and the market was getting close to the end of the day, and people were just liquidating. So a fire sale ensued. So even looking at on balance volume, it would have helped. The histogram component was dynamic in confirming the signal itself. As you can see, it turned red, but really the volume indicator showing that bearish divergence is amazing. So I hope that when you have a trade you're looking at, and for VIP, I cheat a lot because I use my own work. Cheating is a loving way. I look for, is this a sell signal that is on a last conditional change bearish sell signal? Because if I got an LCC bearish signal, that's and again, you can use a high close doji, daily. You can use, again, what we're looking for here on the short term page. We've changed it to a 15-minute. I'm looking for a bullish breakout, for example. This helps on our radar screen that I can go through numerous stocks, numerous commodities on any time frame I'm looking for. I also have it visually speaking on or visually shown on the charts. So Hewlett Packard on a last conditional change high close doji. This is one that is, if you take a look here on the, I changed the time frame, so bear with me a second. So when you get a Hewlett Packard and it tells you it's got a 15-minute pattern and it's above a last conditional change, I can just literally look at the chart and say, what is the condition? Do I want to get into that trade? It's under a convergence pattern? I mean, is it after a strong rally? Is the volume looking positive here? Gee, none of the above is true. Well, forget about it. So again, I like you to make a mental note, record the video, watch the recording of this video, and make sure that when you're looking for a sell signal, if it's under a divergence with our volume indicator, if that next trade looked like I just shared with you, then that's your setup. Your setup is that we have so many stocks, so many commodities. I mean, what do you care whether it's Micron, whether it's AMD? If you're trading stocks for a living, if you're trading day trading or swing trading stocks itself on a short-term basis, that's where the radar screen is going to come in huge and give you an unfair advantage over others, because it'll highlight what's moving and under what condition, and that's the real case. So it's just a matter of you guys what you want to trade and how you set your charts up, and that's the real key there. Okay, so I wanted to make sure that we covered what is the value of the volume indicator that I created. The value is it's a component of momentum of volume, and it gives you a histogram. Many times I've said this before. Oh, I'm sure you've heard me say this, especially in futures. Let's take a look at ES because everyone's interested in ES. If we had a market that's rising and going up, and I see let's see, where is here we go. I say this many times. I look at the 60-minute and I say, gee, if the market's rising and it's got stronger volume and my momentum is making newer reading highs, that does not tell me that this market's in a sell mode. It's telling me that the price action could still move higher. Now, at this point, with today's move, this is one of the very few times that we tried to rally, but we didn't quite take out the ES. I mean, it didn't quite take out. That's not a newer high, right? I mean, from this green bar here to the closes up here, not quite a newer high. Momentum is kind of weakening on a 60-minute on the ES. The volume momentum, you could see my indicator starting to show a divergence up here. That's a little worrisome to me. On a 60-minute basis. That doesn't mean we're going to go straight down to hell in a handbasket, but we would want that to revert back to a positive upside if there is going to be further gains in the ES futures or the stock market in general. So I just wanted to point out, what is the condition of the market based on the 60-minute model of our volume? What is the condition using OBV? Both showed relatively light volume in today's rally, but it came from all the way back from nowhere. So again, we might be in a stall pattern. If the market holds the value of the last conditional changes, the condition of the S&Ps with the breadth being as strong as it is, we could sit here. If we regroup and you see that volume indicator histogram turn positive, the next time we see a buy signal, it turns positive. So right now it's in a sell mode. It trickles down a little bit and it starts to get an upswing under that volume condition, momentum change. It's going to be a spectacular buying opportunity. And that's how I would use it. And that's how I do use this, as identifying the condition of the market. All right. So in the event, that would conclude our time. If no one had any questions on this, this is exactly what I wanted to cover for the room today for our PUG meeting. How do you find value and get more out of the tools that you have? It's extremely powerful. I really would employ everyone tell you to be using this indicator. It's fantastic. That's all I have to say. So until proven otherwise, if it ain't broken, don't fix it. And that's one of the indicators. We don't have any intentions on trying to make it better. It's very hard to make something this dynamic. And that's why I do both the the combination, and I try to teach this, what is the condition of price? Price is the truth, they say, but what is the condition? Price can only if market goes up and it closes strong, it may attract more people. But if no one believes it's got longevity and they want to add to their trade and there's no volume behind it, it's not a sustainable trend. So volume is an integral part of our trade decisions, and using the term, what is the condition of that price? Did it come with strong accumulation of volume? And I think we've developed a tool that everyone can sink their teeth into and wrap their arms around and embrace it as like, this is very powerful, which it is. So thank you for joining me tonight in our PUG meeting. I wanted to go through the combination of how you use that LCC. Why is it on our screen? Why is it a PUG member? We found that you get better confirmation of a trend when it shows a bullish last conditional change breakout. And yet, so if it's, and then you can mirror and look on the chart and say, gee, I like that breakout, for example, and I saw the move, and the volume condition is strong, and if you like that, then that's a go trade, meaning you go with it. So if you get a sell signal, a PPS sell signal, and again, the market, right, Verizon, this is a 60-minute chart. This is not a friendly chart, to be honest with you, just picking one out. Here's a great example. The momentum of the market is clearly in the red. So you have a sell signal. The odds of this tomorrow opening lower are pretty strong. We have a downdraft in, and we'll find out tomorrow in the live trading room. So when you get a sell signal and it's negative momentum, it's worth going for a short in that case. If long, that's when you know you've extended your welcome into the trade. So be careful when you see markets rise and the momentum of the volume is starting to weaken. You see the momentum weaken and the price is going up. It's an unsustainable. In fact, if you notice, and we'll examine this really closely, because this is something that I point out in the live trading room a lot. And I'll try to get this into focus. So when this market closed at a new high, here is what the volume, this was not a very strong close. When you get a breakdown, you have a low close doji, but the next bar closed below the last conditional change, you have a high probability that the stock is going to go down. And the price did go down. Now, again, this is a 60-minute chart. This was yesterday. Today had no follow-through strength. Again, the next trade you look at, if it has a market that goes up and the volume momentum is going down, you might not get out at the exact high, but boy, by gosh, with a negative momentum reading, and in fact, our indicator volume was going negative right there. The next bar was still negative when the price went up, and on balance volume was going up, and our indicator was going down. Clearly, the one to trust is this volume indicator. Thank you for listening. You guys have a great evening. And again, this recording should be up posted in our archive by tomorrow, and you'll all receive an email. Thanks for joining me tonight. That concludes our PUG meeting. And if you have more, you want more information about becoming a VIP and having this indicator, simply email mperson@personsplanet.com or simply call the 561-655-1881. Thank you, everybody. See you in the live trading room tomorrow.